Hello everyone. Well, yesterday's Bank of England and ECB meetings added very little to our knowledge of the policy biases of these two central banks. The statement following the Bank of England's meeting only said that the Monetary Policy Committee's response to the Chancellor's request for an assessment of forward guidance will be released next Wednesday, August 7th, along with the quarterly inflation report. So that now becomes the date to watch for sterling. As for the ECB, President Draghi largely just repeated the message from the July meeting and gave little clarification about forward guidance. My impression is that with the data from Europe showing some modest improvement, the ECB's scenario for a gradual recovery is more solid now, and so they can pause and wait to see how things develop. That should, in theory, be supportive for the euro. However, it was noticeable that both sterling and the euro weakened steadily throughout the day yesterday, even after the final manufacturing PMIs for both of them were better than expected. This demonstrates that the attention is firmly on the U.S., where continued strong data is likely to underpin the dollar going forward, in my view. Now, given the possibility of further political problems in Europe, this recent backup in euro-dollar could be a good opportunity to go short from a fundamental point of view. You should especially watch what happens in Italy now that former Prime Minister Berlusconi has lost his final appeal against a tax fraud conviction. For today, the focus, of course, is on the July non-farm payrolls. The market consensus is for a rise of 185,000, but several estimates released in the last 24 hours have been in the 190 to 210,000 range. This suggests dealers may be pricing in a better figure than just the simple average of analyst estimates would suggest. So the risk may be for some profit taking if the figure isn't towards the top of the one standard deviation range for forecasts, which would be 210,000. Dollar yen is likely to be the most responsive pair in my view. Any pullbacks there on profit taking following the number could be an attractive opportunity to establish new longs. The critical area to watch for the resolution in the fight between the yen bulls and bears is the psychological level of 100, right in the middle of the triangle that's been forming recently. The next resistance level is at 180, followed by 101.50. Support is at 98.45 and 97.65. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.